Okay, peeps, welcome back. So today we're going to be talking about max profit targets for the grayscale trusts. I know this has been something that a lot of you have requested lately, so we're going to go ahead and address it. We're also going to go over when we plan on taking profits, kind of what our strategy is going to be, and also the option strategy that we intend to lay out going into the peak of this bull run. So with that being said, let's get it. So before I go ahead and get into the content first, the first thing I want to mention is that just so you all know, we actually have, I'm not going to say it out loud, but we have quite a bit just sitting on the side, completely separate from what we've shown you guys in our accounts. As you guys can see here, it is well over six figures. Just sitting around waiting to use for whatever we want and or need and or potentially buy on a massive dump in the markets, assuming that happens when the Fed cuts rates or whatever. So the amount of liquidity that we have on the side, so to speak, is much greater than what you guys are seeing. We just are not going to show every single account that we have for privacy reasons. So anyways, let's go ahead and start with LTCN and BCHG. So if we go ahead and do the Fibonacci retracements from the cycle high to the cycle low here, I'm going to try to get this as accurately as I can. I think the bottom for LTCN was like around $2 a share or something. So we'll put it at $3. That should be good. So the maximum profit target on LTCN, as you guys can see, according to the Fibs, is way up here. It is almost $2,200 a share. Could that happen? Absolutely. If it does happen, well, I mean, it could happen. There's no guarantee it's going to happen, but we'll just say a 50 times a 40x or 50x times $40, which is the current price, you'd be looking at about $2,000. So this is our personal positions, as you guys know. So if we ended up getting our cost basis is actually quite a bit lower, so we'll have to recalculate this. So let's go 2,100 divided by 13 and times that by, hold on a second, 2,100 divided by 15. Yeah, so it's 161x times the amount that we have invested. As you guys can see, it would be an absolutely insane amount. Trust me when I tell you, I would love nothing more than to see that show up and then be able to sell at that price. But we don't plan on taking profits like that. So that is what the potential target is for LTCN. So if LTCN and BCHG did by themselves, not including all the other crypto positions we have, hit their top Fibonacci retracements, we would be able to cash out for seven figures. So leaving these Fibonacci's on the chart real quick, I'll basically show you guys what we plan on doing. And this is for every position we have, not just the grayscale trusts. You see this number right here, it says 70 to 80%. We plan on starting to take profits at this number, okay? Reason being, as you guys can see, all this previous price action here was kind of up and down and all over the place. It was very unpredictable. The best way to guarantee that you walk away from the markets in crypto, or I shouldn't say guarantee, but as close to a guarantee as possible in crypto, is just to take profits on the way up, okay? There's a lot of people that will say, okay, at $100, I'm going to take 25%, 200, 25%, 300, 25%, 400, 25%, right? It's best to scale out on the way up. Crypto, when it gets into a parabolic bull run like this, is not so great for position trading because it generally tends to only go one direction, and that's up. And if it does have a drop, it's a massive drop. It's not something you can easily position trade. So a lot of crypto investors will simply scale in and scale out. So at that 70 to 80% mark, we do plan on beginning to take some profits. We might take like maybe 20, 25% at that level. And then just kind of wait to see maybe if it's going to move up to these fib levels up higher or not. What we might do is we might maybe just start 25% here, maybe take like another 25% at this fib level, and then maybe take the rest off the table up here at this fib level. If it gets up to this one, even at this level, that would still be amazing. That'd be 100x on our positions. So we would not be upset about that. So that's LTCN. Your top target's going to be about $2,200. So BCHG, I believe the target for this is actually even more ridiculous for BCHG than it is for LTCN. So I think the dollar was like around maybe 50 cents or so. So it's about as close as I can get it from this view. So the top price target on this one is going to be about 254 bucks. The current price is 16, so we'll go ahead and measure that. So 254 divided by 16. Well, we'll just say 1670. Keep it as accurate as possible. So you'd still be looking at a 15x just to get up to that level. It's possible that could happen. I mean, even if BCHG only went from the current price to the peak or the previous peak, it'd be about a 3.5x, which is 60 bucks. So that's definitely possible. We've been holding our BCHG for a while. Our cost basis on this is only $4, so it's not that much. I mean, if we sell it at the peak, we're going to make a roughly about a 15x. That's when we plan on starting to take profit. But if we took the whole thing off the table, as you guys can see, it'd be quite a bit. But if it goes up to $254, that would just be crazy, and I would not know what to say. I would honestly be shocked because, we've only been through one crypto bull cycle, and this is all still relatively new to us, even though we know these markets pretty well at this point. So we'd get about a 63x. I mean, that's a huge move. Can't complain about that. As I said, between that and LTCN alone, that would put us at almost 7 figures. That does not include the Bitcoin miner stocks or the native crypto that we have. So that's what the top fib looks like. Again, here's the 70 to 80% level where we plan on starting to take profit, just to be sure that we're not going to get dumped on by the whales, because that is a risk. But we're just giving you the top targets here. So HSEN, this one might seem a little ridiculous because of that massive candle over here on the left, but this is just simply how we're going to measure it. So top fib level up here is about 126 bucks. Current price is $8. Now, I want you guys to understand that there is no guarantee. Okay, there's no guarantee that these prices are going to hit these top fib levels. It's possible, but it's not a guarantee. So just keep that in mind. So 126 divided by 8, you'd be looking at about 16x. Just assume you put like, I don't know, say a couple $1,000 in. I mean, that's a pretty good return if you ask me. I don't know about y'all, but you could do a lot with that. So ETCG, this one again is a oscillator to Ethereum. So when Ethereum moves up, Ethereum Classic moves up, and likewise with the Grayscale trusts. So we do the measured move here. The top fib level, as you guys can see, is way up there. So we'll basically just say $400. It's pretty much about $400. So 400 divided by 1688, you're going to get about a 23.5x. Assuming that does actually happen, we'll just say you put the same amount of money in this one. That could be your potential return. Again, of course, there is no guarantee that the fibs could be hit. That's just simply an estimate of where the price could go. So GXLM, this one is interesting because it's actually almost back at all-time highs, believe it or not, even though Stellar itself hasn't really done much. So the top level for this one is about $390. Again, a pretty large move from where it's at right now. But it's still only a 6x. So, I mean, a 6x in crypto is still actually pretty good. That's considered to be conservative. So you'd be looking at about 12K on a 2K investment. In all honesty, I would say that LTCN, HSEN, BCHG, and ETCG, all 4 of these are cheap and have potential for much greater returns than GXLM. Nothing wrong with GXLM, but if you were going to get the best return, then probably buying down here at the bear market lows would have been your best bet. So ETH, this one, we'll go ahead and measure this one right now. So from the top to the bottom here, the top Fibonacci on this one is going to be roughly about $280. So it's Actually, a much greater potential return if we were just measuring maximum profit potential here than GXLM. Again, nothing against GXLM, but GXLM has moved up much faster than ETH. So roughly about an 11x on this one. Do the numbers, put the amount of money, or take the amount of money that you would want to invest in this if that's what you want, and then times it by whatever the return would be. So we'll take a look now at Zcash. Whoops, did not mean to do that. Okay, so let's try that one more time. So this one is really, really undervalued in my opinion. This one has a long ways to go. So $165 at the peak. That's quite a ways up there. So divided by 7.9, you're looking at about a 21x. We'll just say 21x times, again, $2,000. You guys can see what the numbers would be here. So GSOL, this one is quite interesting. So this one's actually going to be a little bit more difficult to measure. If we just measured from that swing high to that swing low here, you guys can see we pretty much already hit the top Fibonacci level there. So that target did actually get filled. That just goes to show that the Fibonacci retracement levels do actually work for these moves. So if we go to this peak, to the swing low, which was basically down there at the support zone, you guys can see that long red wick down there. Or maybe you can't see it. It might be a little difficult, but I'm sure you can see it now that we're zoomed out. So assuming, again, this is all based on assumptions, assuming that this thing does actually have this move up to this next top fib level, you'd be looking at roughly about a $1,900 GSOL. So yeah, that's insane. But again, if you were wanting to get the best move on this one, to get in back here during the bear market lows would have been your best bet. So divide that basically by 431. You'd be looking at about 4.4x. Again, do the math on that one. If you had gotten in at $40, your return would have been absolutely nuts. It would have been like a 50x, assuming it gets back up there. So the fib retracement on this one will go again one more time from the swing low to, or swing high to swing low here, which is basically the bottom of that wick. So the next potential top fib target for this one, which is Mana, we did own this during the last bull market cycle, not the Grayscale Trust, but the actual underlying token. You'd be looking at about $210, so roughly about a 4x from the current price. So here's GBAT. We did have some basic attention token during the last cycle as well, just not the Grayscale Trust, because again, we didn't know about it. And a lot of these actually didn't even exist during the previous bull cycle too. There is also that. So $96 on this one, that would give you roughly, I'd say roughly about a 4.25x, something like that. So not bad. Of course, it could go much higher. That's a possibility too. There's nothing saying that it can't go higher than these fib levels. We would just need to see a peak and then a pullback for a further potential move up. So again, swing high to swing low. You guys can see it right here. The top fib 260 is based on basically the cycle high to the cycle low. That was the previous move. If we're taking a look at the current move, the peak could be as much as $640. So that would be, I think, roughly about a 4.5x or so. GSOL, this one is really just kind of all over the place. So swing high to, we'll just say on the same candle, swing low here. So zoom out here real quick, take a look at this. The potential target for the top of this thing could be about $1,000 on FILG. That'd be roughly about a 3.5x. And GLIV, this one would be roughly about, assuming that we do get another leg up, roughly about $250 on this position. So you're going to get almost exactly a 4x on this one. So all of these trusts have some serious potential here. I would say in some cases it's better to own the underlying than it is to own the Grayscale Trust. Like for example, Filgy. This one's already had a massive move, as you guys can see at the bottom here. The very bottom was about $8, so we've moved up like an insane, what is that, like a 30x since the lows. So a lot of that move has already been basically priced into the market. Whereas Filecoin itself, which we do actually have a couple $1,000s in Filecoin, just so y'all know. If we take a look at Filecoin, I mean, you guys can see on the grayscale chart, it's already moved up massively, but on this thing, it's barely even moved. I mean, just look at the peak compared to the current price. Current price is $9. The peak is at $236. If you're looking for your 30x, I would say the underline is probably a better bet in this situation, just simply because it hasn't really moved yet. The altcoin season hasn't happened. Bitcoin dominance hasn't really showed itself, or Bitcoin dominance hasn't broken down to give way to a true alt season yet. And that's true for some of these grayscale trusts as well. I would say basically any of these down here, maybe with the exception of Zcash and ETH, like GSOL all the way down, probably just better to take a look at the underlying, in my opinion. I think the most undervalued of all of these trusts, based on what the charts are showing me, would be LTCN, HSN, BCHG, ETCG, ETH, to some extent, and Zcash as well. Those 6, in my opinion, are very undervalued. The other ones are kind of getting a little expensive at this point. But how you guys want to go about that is entirely up to you. So I'm just showing you guys what I see, okay? So next thing I want to talk about is the option strategy that we plan on doing. So as you guys can see, here, we kind of got out of some of these positions. So we don't have HUD 8 anymore. We don't have Cypher anymore. We still have BTBT. We're going to get out of that one too. So pretty much what we plan on doing here is we plan on just churning options premiums out of the market via these Bitcoin miner stocks. So it'll give us a way to make some profit on the way up in the bull run, but also give us a chance to produce some extra income. So as you guys know, the wheel strategy is notorious for creating income and also potential profits. A lot of multimillionaires use this option strategy. I've seen quite a few people on Twitter that also use it that, are worth well over seven figures. So apparently it is effective. It does work. So let's go over a brief overview of what the wheel strategy is. Just in case you guys don't know, we can kind of give you a layout of what that is. So I'm actually going to go to the stock that we already have. We're running currently the wheel strategy on. So I'll take a look at CLSK, which is CleanSpark. This is the one of the most expensive Bitcoin miner stocks. So pretty much what the wheel strategy is, in short, is what you're doing is you have enough cash on the side to start, or enough collateral of some kind, which essentially is cash and or margin. You have enough money set aside to buy these shares in lots of 100, okay? So with the current price, you guys can see the current price right here. You basically just times this times 100. So 1909 times 100. Whoops. So basically that is the minimum amount of money you would need in collateral to basically start the wheel strategy. Now, what is the wheel strategy? Essentially what it is cash secured puts and covered calls. So what is a cash secured put? Basically, it is a sell put, as you guys can see on here. We're not doing buying, we're selling. Okay, we're selling puts, selling calls. So a cash secured put, in other words, is known as a sell put. Okay. And generally the way it works is you want to basically get into this thing below the market price so you can get a better deal on the stock. Pretty much what you're saying is you're saying, okay, I want to buy one lot of this for, 100x, basically 100 shares at this particular price, so 1909, and assuming that the contract closes below whatever your strike price is. So if my strike price is 19, if it closes under 19, then I will get assigned the shares. So that is the cash secured put part. I'll collect the premium whether I get assigned the shares or not. If it closes above the strike price, then I'm not forced to buy the shares and I still get to keep the premium. But if it closes below the strike price, then I have to buy the shares most likely. but I still also get to keep the premium. Okay, that's step number one, would be the cash secured puts. Step number two would be once the shares are assigned, assuming that they are assigned to me, meaning that that the share price on the date of expiration, the market share price, closed below the strike price. That means I would get assigned the shares. So then I have the shares. I'm forced to give up the money that I had as collateral, which in this case was basically $1,900 or 19 times 100. And then I turn around and do what's known as a covered call, which is basically a sell call, as you guys can see here. Again, don't take my word for it. Do your own research. Look into this kind of thing if you want to do it. It's something you're interested into, just to verify for yourself that what I'm saying here is true. And then we basically do a covered call. So let's assume the strike price was 19. I got assigned at 19. And, by the end of the week, the stock, or, let's say starting Monday, by the time the market opens, because they have pre-market trading, of course, let's say the stock goes up to $20. So I got my shares at 19. The shares at the time of market open are at 20. So what I would probably do is I'd probably want to sell for like maybe, I don't know, let's say $21. Okay. So in this position, basically my share price is 19, the market price is 20, and I want to sell a strike at 21.50. So what does this do? Essentially, if by the date of expiration the market price of the stock is above my strike price, which is considered to be out of the money, which is above 21.50, then I will be forced to sell my shares and I will collect the 21.50 times 100 plus the premium. So in this case, it would be 21.50 for the value of what the contract is plus the $100 in premium. And because I got my shares at 19 and the strike prices that I'm selling at is 21.50, I would get the $2.50 in profit times 100 shares, which is $250, plus I would also get the $100 in premium. So I'd no longer have the shares, but I'd get the $350 in profit and premiums. And oh, right. Also, because I had to sell the shares that I had, they got called away from me. I would also get the 21.50 times 100 for the lot. So basically, the buyer is going to give me the money for the shares, and then I would get the 21.50 plus the 350 for profits and also premium. So then I could turn around and do another cash secured put after that, and hence the wheel strategy. So kind of what the goal here is, in short, is we're going to do weekly cash secured puts and covered calls on these things, okay, on the Bitcoin miners, as a way to kind of create more income, so to speak. And we're then going to use this to turn around and buy more crypto and dividend paying stocks going into the peak of the bull run. Again, we don't know exactly when that is going to be. Depends on what crypto does. If there's a pullback and sideways chop for the next 6 months, then we're probably looking at the end of 2025 for the top of the bull run. If it does not go down and chop and it just goes straight up, then probably going to get the cycle peak sometime at the end of this year. So that kind of determines how much time we have to do this. But as you guys can see, based on the wheel strategy that we've already done, so we have our 3 contracts here on CLSK. We've managed just this week alone on cash secured puts to get roughly about almost $650 in options premiums. And I mean, again, the share price is at $19, strike price is at $23.50. So at this rate, we'll most likely be assigned. But again, the options premium kind of offsets some of that risk. So the true cost basis of our shares is actually lower than $23.50. And then we'll take a look at HUD 8. So we only have 1 contract on this as of right now, but as you guys can see, we got $105 for a strike price of $11.50. Again, this is a put, so it needs to expire above that price for us to not be assigned the shares. And currently it's below the price, but again, we got $1 in premiums, so the true cost basis would actually be something like $10.50. So that gives us roughly about $750 on the week. We basically plan to do this week over week over week as a way to reaccumulate more Bitcoin miner stocks and, grayscale and crypto and all that jazz. So it's an option, pun intended, for those of you guys that want to also get more income, not just accumulate crypto during this bull cycle. It's something that we're going to start implementing, that we have started implementing this week, and we plan to continue to do so. Especially with Bitcoin being at all-time highs, and the monthly RSIs, or not RSI, the monthly EMAs being all the way down at 30,000. It's just it seems like probably a pretty good move as of right now, but we'll just have to wait and see. So anyways, this is max price targets for the Grayscale Trust plus our options plays. Hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.